Hello there, traders. Welcome. Oh, my internet just popped in then, or my MetaTrader just decided to refresh then. A little MetaTrader move there. Let me just tilt the camera up a little bit more. Hope everybody is doing well. We're going to go through typical sort of market breakdowns. I'm also going to go over the question today, and we're going to talk about, have we ever blown a trading account? And we're going to talk about the lessons that we can learn from doing things like that. So I'm going to come on to that a little bit later in the programming. We're going to get onto the markets. There's been a lot of movements going on recently, so I want to kind of break down what has been happening in the markets for you, as well as kind of maybe have a little look at some markets that have been kind of moving, if there's any opportunities on them. Case in point, stock markets have been moving about a fair bit. I also wanted to talk about silver today. I'm in a silver long currently. Was doing really well. It was very, very close to my targets, but has pulled back about 40 pips or so from that sort of levels where I was looking to kind of take profits at. So we're going to talk about silver a little bit. If I'm going to hold it, what I'm going to do. I think I am going to hold it, to be honest. I've also taken in a couple of other positions as well, based off the currency strength meter. So I'm going to show you those as well. Morning to you, Eddie. I hope you're doing well. Right, guy. That move in euro was crazy. Yeah, there's been a huge move in euro US dollar. Lots of volatility around in the market. And yeah, I think we're over sort of 400 pips for the week, I think it is, in terms of a move, which is astonishing, really. You know, if we look at this move that we've had so far, it's 450 pips. Now, the last time we had anything kind of close to that was in November of 2022, where we had this huge kind of push up here. This was actually a commitment of trader report signal. This move was. This move is a bit of everything. There's a lot going on with the euro and Europe in general at the minute. Namely, the biggest thing was the huge sort of stimulus that has been provided by the government and the European Committee, basically injecting around 800 billion euros worth of stimulus. We saw German 10-year bond yields absolutely rip higher. If you just go to, let's go, no, not the interval change, German 10-year government bond yields, they absolutely ripped higher as well. If you look at it from an hourly chart, it gapped 20 basis points and then continued to drive higher. We then had the ECB interest rate decision as well. They've cut interest rates as expected. And I haven't actually looked at the outcome of that yet, in terms of not looked into the sort of the press conference or anything like that just yet. But we know that euro has continued to push higher, continue to make that move, especially as the sort of coming into the early start of the US session. So, you know, think about it in terms of stimulus. You know, what is stimulus essentially? I imagine the DAX is probably doing pretty well. It's kind of come back a little bit today. But if you think about it, government have added loads of stimulus. So government spending is a way of adding stimulus to an economy. And obviously we're getting stimulus in Germany as well, stimulus across Europe. And then you've got the ECB that have cut interest rates across Europe as well. And that is essentially to try and add further stimulus to the economy, right? Because there's been a lot of talk, you know, when we were back here in July, we were talking very heavily about the fact that the European market isn't doing very well. A lot of poor data was coming out of Europe, and honestly, it still is. We haven't seen too much in the way of change, but at the same time, with this big stimulus, It could impact things like GDP, right? Government spending impacts GDP. So there could be higher GDP to come within Europe. And the market is basically, front running now that strength that is coming from those government bonds. Sorry, not government bonds, from the government stimulus, essentially. So yeah, big moves in Europe. I mean, if we go take a look at some other markets, I was very keen to be a buyer of sort of Euro Oz, Euro Kiwi, but I've not had a pullback. And these are just kind of ripping higher now. So I need to wait a little bit on some of these moves. Even Euro Pound, which, the pound's quite a strong currency at the moment, and even Euro Pound has ripped higher as well. Euro Pound this week up 165 pips, which is quite a substantial move there. The only one that Euro's down against really is the Swiss franc at the moment, although we did get a nice pop higher. We actually broke out of this kind of weekly sort of range that has been forming for a good while now. And Euro yen back at these highs, starting to see yen strength coming back into the market, which is very interesting. I have had a very small stab at buying the yen, because I was very cautious about doing that. I don't know if anybody's watched my video from yesterday, just talking about the hedge funds, what they're doing with the Japanese yen at the moment. They're buying yen very aggressively. And when they start to get aggressive and they reach extremes, I become a little bit more cautious with my approach, because at any point they could just take some profits on those moves and we could see a bit of a correction. But I did take an Aussie yen short. So I am Aussie yen short at the moment. I actually just, based off of this breakout here, that's where I'm short at the minute. So just to kind of show you, in below that low, let me look at my order over here. So Aussie yen 93.78 is my entry. My stop loss on this one is 95.14, okay, because my take profit is quite a way away. And I'm looking to see if we are going to get this kind of significant momentum down back towards these lows. Now, my stop's not as aggressive, I've kind of left it up there. And to be honest, this trade isn't an aggressive trade for me. I went in at 0.25%, simply because I'm worried about that potential over risk of the overweight Japanese yen. It seems to be a very obvious place to trade at the moment in terms of just looking around the board, yen just getting strength because dollar yen is starting to breach that 148, 149 handle. So, it'd be very sort of easy to kind of jump on that Japanese yen trade. So I need to see two successful closes. Make that a bit bigger. Two successful closes below these lows here, and then I'll be more confident in seeing that Japanese yen continuation. But yeah, some crazy moves going on at the moment. Hi Ratish, hope you're doing well. Good afternoon to you, Vincent, as well. It's been chaos in the market. How do you navigate your way? Which pairs do you trade? I think when you look at sort of whenever I look at the market and I think there's a lot of uncertainty, a lot of chaos, as you've mentioned there, Vincent, I really try and focus on currencies that are best placed in terms of safe haven or risk off, right? And that's Japanese yen, right? Japanese yen's doing well. I am Aussie yen short right now. I am also Aussie Swiss short as well. So I am short Aussie Swiss as well. This is my current position on this. So I'm basically in these type of scenarios, I go and look at currencies that could be impacted greatly by risk. I mean, I was very close to shorting CAD Swiss this morning off of this break, and I was very close at shorting CAD yen here. I didn't, but these two have kind of floated quite nicely to the downside as well. This was just something I put on there because at 6 o'clock this morning I saw this breakout and I was like, this is very tempting. But I decided to wait for the 4-hour close. So I was going to short the 4-hour close here, but when I looked at risk reward ratio, by that point it had gone. So I was kind of measuring up and saying to myself, well, you know, what would it have looked like if I took the hourly chart trade instead? You know, how would that shape up going through? But yeah, I think there's a lot of risk in the market at the moment. If we look at the volatility index right now, we're above that 20 level. This is something that I really like to look at. The volatility index, I think, is so important to have a little look at in your trading, because what we tend to see when volatility spikes, you usually see quite that quick move to things like the Japanese yen and Swiss franc, and then it can build up a lot of fear in yourself as a trader, going, am I missing out on something? Am I missing some kind of big move? Well, you know, looking at the volatility index, it's telling us that the markets are fearful right now, because we've got this constant grind higher. It's not a snap higher like we saw here and here. We're kind of getting this little bit of a grind higher instead, which is very, very interesting. Now, anything above 20 for me on the volatility index is something to be cautious about. If I just go grab you a chart just to kind of highlight, let's just use the S&P 500 because volatility index is based off of that. But it kind of works for kind of all risk markets, really. Just regular these. But you can see, like, when we get like a really sharp spike higher, right, you get this kind of very knee-jerk reaction within the stock market. And then what usually follows that is another sort of pullback, which then offers these kind of nice little buy the dip opportunities. When we slow grind higher, right, you get these kind of nice little swings as well. But usually after we kind of hit the 20 and come back below it, there can be a nice little kind of push up to the upside, very similar to what happened here. We kind of cracked above that 20 level. The market was pushing in lower. When we gapped down, went below 20, we saw that kind of nice little spike up in the volatility, in the S&P 500. So what I'm looking at, essentially what I'm trying to tell you, is we're in that kind of grind higher fear mode at the moment, which is causing this real kind of impact of stocks falling. Now, why are, when we look at it, stocks are falling. So what typically happens in those situations, or why is that happening really? Ultimately, it's come down to the trade tariff situation, and it's also come down to the relationship between Trump and China right now. I don't know if you've seen the reports from China that basically stated that if the US want a trade tariff war and any other type of war, we'll give it to them. So that's quite a risky statement to make, right? So looking at that, that's again going to add some fuel to the fire of uncertainty. You've also got the poor economic data coming out of the US as well. Think about what's been happening in terms of US consumers. Now, we did have a bit of good data out today, which was the unemployment claims came in a little bit lower in the US. But when we go take a look at the sort of general what's going on, yes, that was a little bit better. But there's the most important sort of consumer-based data points were really struggling, right? So retail sales coming in lower. GDP now is forecast to come in a hell of a lot lower now, for many reasons, but mainly because retail sales have dropped so significantly. The consumer isn't spending in the US. Services, PMI came in a little bit higher, but we've also got things like consumer confidence, which has reached its lowest level for 2 years, right? So huge sort of changes when it comes to kind of the economic outlook for the US, and not in a positive way. So you've got this kind of triple-edged sword, or whatever you want to call it, where you've got sort of risk, in the markets. You've then got the added fuel of trade tariffs between China and the US, as well as other nations as well, which are kind of coming back with retaliatory points. You've then got the consumer data in the US not doing well. I think if you go to the end of the week and we have a non-farm employment change that comes in significantly lower as well, then I think that's going to add even further kind of fuel to the US dollar weakness that we've been seeing in the markets as well. So there's a lot of factors going into this, but you know, for me, there's two ways you can look at it, Vincent. You can either say, right, okay, a lot of chaos in the market, it's probably best to trade small, or just leave cash at the moment. Don't even bother putting in some trades. Wait till it all calms down, and then, you know, when it kind of normalizes back to what you're used to, then start to implement things, right? Or, you know, you can just try and navigate yourself. What I've found quite interesting at the moment is the fact that we saw the US stock markets drop. We saw government bond yields fall as well. They've started to climb a little bit because bonds have also dropped in the US. Gold on the other side of that was bullish, right? We had this really nice kind of bullish move in gold recently. It's got a bit choppy now. Or you know, that being said, it is a bit choppy at the moment, but I still feel like gold upside is something that we should be looking at, because the market's kind of looking to kind of outsource that kind of risk at the moment, and we're kind of seeing that in gold. Silver, I quite like as well. I'm still silver long at the minute. You know, we had this really nice breakout of trend here. First target's up at $33. Second target's up towards 34.50s. So, you know, at the moment, it's kind of looking like the market is kind of trying to seek sort of safe havens as a way to go. So, you know, gold, silver has been performing pretty well. Japanese yen has been performing pretty well as well in these kind of scenarios. But yeah, it's been a very interesting time at the minute. I mean, even look at cable. You know, I got stopped out on cable last week, and look at it. It's just absolutely rallied higher. So unfortunately for me, I got taken out on this cable move, which I basically bought in this area here around 126.50. Should have took something off the table at 127, but I left it. Whole numbers were really well on the pound, and then it's come back in, retested these lows, and then just, you know, shot to the upside there. So unfortunately for me, I just got in a little bit too early. Hi Tony, hope you're doing well. Honestly, I might sit down, guys. 1 second. Just gonna see this really slow move to the downside now of me just kind of slowly going with it. So yeah, I'll go through a couple of opportunities that I've seen in the market. Gold. Yeah, we'll go take a little bit of technical analysis on gold then. I still like the idea of being bullish gold. The way I am bullish gold at the moment, though, is through silver. You know, I'm buying silver at the minute. Just turn this down a little bit so you can see me. So yeah, that's the way I'm kind of getting into the market at the minute, into this kind of correlation on gold. Let's have a little look then. So let's get rid of these drawings. So looking at the sort of weekly chart, you know, market is very bullish. I think we were up over nearly 11% this year, or was at least until last week. Very bearish candlestick last week, which could, you know, in theory, invite a little bit of selling pressure. I just think that the safe haven part of gold at the moment is going to keep this fairly bullish. We came into this low here and we found some support, right? If we look at the 4-hour chart, this was this nice little kind of spike lower in here. We've revisited it. Market has broken higher. Looking at the 4-hour trend right now, I would say it's still technically bullish, because we're kind of working within this leg higher at the moment. So that high and this low, okay? Within that, we've kind of formed a, you know, what can be classed as what's called a complex pullback, where you've just got like highs and lows being formed within this area. But to me, this is still, I'd say that's still fairly bullish. I think if we break to the downside here, break these lows, then I think that would be a sign that we're going to see further downside, perhaps back into this level where obviously we've found that support in the past. But right now, I quite like where we're at. Looking at on a 30-minute, I guess we're kind of breaking trend on a 30-minute as well. So you've got this kind of very familiar pattern. If we go onto a lower time frame, we're going to see that ascending triangle pattern, aren't we? So you've got that base that's being formed here, and then you've got these higher lows coming into it. So it's not like the perfect one, but looking at it like that, and we've just broken out of that move, and we've tested and we've held above it. So that, I would say, is quite a bullish move. I don't necessarily trade on the 5-minute time frames anymore. So, and we've got 8 minutes until the US opens officially. So I don't think that's a smart move. But, you know, looking at this from a higher time frame point of view, yes, you know, we've got this kind of nice little area of support here. Can we see a move back up into 29, 23s? If we breach these highs, then I think that tells us where the market sentiment is at the moment, and the fact that we are going to see, you know, higher prices, perhaps all the way up into that 3,000. It's just $3,000 is talked about quite a lot right now. And things can change quite quickly in the markets. That's what we've seen recently. Markets have been changing, you know, very, very quickly. It's hard to pick out a sort of key direction. Oh, I didn't realize the microphone was blocking my whole face there. But let me know, guys. What are you guys into at the minute? Tony, I think gold stuck up there waiting for an FP. Yeah, I think you're right. I think the market is waiting for another catalyst to get going again, and the Labour report could be that. Labour report could really be that. Let's have a look at the currency strength meter then. So this is what I've been kind of focusing on this week in terms of currencies. I was looking at, so Aussie Kiwi downside, dollar CAD upside, but that was because the currency strength meter is a technical based indicator, right? So last week it showed us that the dollar was getting bullish, but my fundamental view is that that isn't correct. The dollar is bearish, right? So I had to include the US dollar because it went from a reversal zone of -5 back to 0. But, you know, I know from the fundamental tracker that it's not doing particularly well, the US. So I didn't really want to trade these anyway. And you know what? Price action hasn't even allowed you to do that kind of trading regardless. So that's been okay. Other markets though that have kind of come up, Aussie Swiss. So I noted, basically what happens is when I'm looking at the sort of markets from a currency strength and weakness point of view, and then I look at the situation when it comes to the conditions around that market, what I'm looking for is one of these days. Okay, so let me just get a different color tool. One of these bullish days, right? Because what it's telling me is we had a bearish Monday, bearish Tuesday, Wednesday was bullish. Okay, so what it's telling me is that price is pulling back, and that's exactly what I want to see, because that means that we could be going into a phase 2 on the daily chart, and I want to track that phase 2. Okay, it's like these ones here. Like these are technically phase 2s, right? Of trends. So I want to be trying to track that. So what I did was I looked at Aussie Swiss. Let's go to Aussie Swiss. And I was like, are the conditions there to get short, right? Because I looked at the daily chart and we had this very strong bullish candlestick yesterday, which could put a lot of people off. And it was down at this kind of support zone down in here, which is a strong level of support back in December. You can see it was strong because that was the reaction of it on the 3rd of February. And below this level, a lot of buyers coming in. And the reason why we're probably seeing a lot of orders down here is because when you look in history, prices haven't really been this low. So it could just be good value, right, to get on the back of. But I still like the idea of downside here. Now, looking at the 4-hour chart, the 4-hour chart is still technically bullish, right? You've got this higher high, higher low that's just taken out previous highs. So we have a technical higher high here. So I'm a little bit cautious with it. That's why I've gone with a 0.25% risk on this one. Okay. But really what I looked at was, if we are going to see the daily chart sort of trend continue, I want to start to see the hourly make a new low, and it did. So basically broke through this low, made a new low here. So I ended up taking an order here, put my stop losses above the highs, and this is the current position on Aussie Swiss at the moment. A few questions. S&P 500 to the downside again, nat gas to the downside as well. Yeah, natural gas isn't having a good moment right now. Still fairly bullish though, I'd say. If you look at it from a weekly chart point of view, I think our targets for nat gas were 5.5. I don't know what that's doing. Let's have a little look at the futures price, and let's have a look at the indicator here. So the indicator is suggesting we should be short natural gas at the moment. Climb that up from last week, you know, so we should be looking for shorts here on natural gas at the moment. Again, we've got a situation at the moment in terms of Europe are looking elsewhere for their sort of natural gas resources. They're trying to get away from relying on Russia too much, and I know there's been a lot of pressure put on Norway in that sense. So we might be getting a little bit. I mean, this is a nice level. I think if I was looking at this, you know, we have the COP telling us that we should be bearish. We've kind of double topped here, haven't we, potentially, because the market tried to break through that high. Let me just zoom in. The market tried to break through that high and has failed, not once but twice essentially, and now we've got this. So, you know, looking at the 4-hour time frame here, I wouldn't be too out of whack, you know, that if we got a new low coming in around here, you know, that could be a change of trend and we could see a move to the downside. Weekly price action is quite concerning though, because we've broken through some key areas. So trying to see how well we've kind of tracked with commitment of traders this year. So it was saying short after this week, and we did get a couple of weeks of downside before a rebound. Retest of a weekly high as well, pretty good. Said we should be bullish on this area here, and it was bullish for a good period of time. Said we should have been bearish here, so that was a no-go because that didn't work out. So we have sort of I'd say one winner. Too early to tell on this one because by the end of the week it could be still coming in a little bit lower. Bullish here, yes. Bullish here, yes. Arguably bearish here, yes. Bullish here, no. And then after that there was one here that said bearish, which, yeah, arguably, you know, it could be on a very similar setup to that. We got this nice little double top and a move to the downside. So out of the past sort of 1, 2, 3, 4, 5, 6, 7, 8, you know, an 80% sort of win rate on that sort of period of time from November 2023 till sort of now. So yes, I can see that we're kind of potentially going to get a move there. Let me have a look at the other reports, because I've not really looked at the COP reports on energies, to be honest. Okay, so the hedge funds are longing. They're getting more bullish. They were bullish through this period here. They have not reached an extreme. So that indicator that I was looking at there has reached an extreme. trying to look at extremes, previous extremes as examples. This was a failed extreme here. Let's have a look at what the commercials are doing. Because as price moves higher, they're going to sell more, right? Because they're going to make more profit, essentially. But we are coming down into some areas of extreme. But, I mean, again, that was that failed one here. That was selling at extremes here, and it did come down for a few weeks. Again, here as well. So I think I want to see more of that. I want to see more downside there. If we actually look at what's happened in terms of, let me go to the detailed report here. We were negative 65,000, which was a 52-week high from the speculators. And then they since have just been kind of increasing those kind of short positions. Yeah, I don't think I'm a fan of the reports here. You know, when you look at the crude oil reports, right, look at that. January 21st, 298,000, 264, 230, 220, 197, 171. You can see they're actively selling oil, right, since January 21st. It might have been a bit longer than that as well. Let's go to the next dates. So yeah, so the one before that was the extreme. So that was at 306. So January 14th, we had a commitment of trader report extreme on oil, which I guess is the, and then we've seen that kind of downside move coming into play there. So that's how well extremes can work. We are coming to a potential another extreme on oil prices down towards these sort of lows there. So that'll be interesting to see if we get to that point. Kind of brings me on to your question here, Irfan. What do you make of oil? Technically is a big support, but fundamentals don't look good. No, the fundamentals don't look good for oil, especially when it comes to like OPEC, and you know they're trying to basically cut production as well. Now futures prices are already kind of breaking into these kind of low areas here. If we go to the sort of CFD pricing at the minute, we're just at that point, you know. Really good move down. I really regret not shorting this now, because my analysis was saying short oil, and yeah, I didn't get onto that move. But you know, we're at a very big support now, very, very big support. So I do feel that if we are going to look at anything, I wouldn't necessarily want to get short now, right? Last week, okay, start of this week, okay, because we still had some downside to go before the level. But now we're kind of in that zone, aren't we? And I think it's going to be hard to find sort of a value trade within that. If we break out of it, then yeah, you know, there could be some further downside to had. You know, maybe even $60 probably be the next point of interest. And then below that, I'd be going sort of in $5 increments. So $55, $50, $40, so on and so forth. Whether we'd reach 2020 levels, I don't know. I doubt it. I very much doubt it, because that's when oil prices went down to sort of 50 cents a barrel, which was just absolutely insane. But you know, there could be a period where we do see oil prices coming in a lot lower. It just depends on how much production is going to increase by. I haven't looked into the details of that, but you know, the sentiment around the market is very much bearish oil. This will play right into Trump's hands, really, in terms of trying to bring that inflation pressure lower. But yeah, I think, you know, looking at the daily chart here, how are you going to trade that? You know, I like to look at these little phases, pullbacks here. You know, any kind of moves back like that in that sort of downward trend, I like to keep an eye on, because I then like to look for those changes in trend, right? So we'll just highlight what happened here, what happened here, what happened here, right? All at those kind of big turning points. We can go to the hourly chart. You can see it was a little choppy, but market came in and then it finally broke that to the downside. That was the main problem, really, was that when that new low formed, you're very, very close to that zone of support. Up here as well, we had a very similar pattern. We had this kind of big double top pattern and then we broke it. This one would have been really nice because you've got that kind of reward to risk ratio. Like you could target down here, put a stop loss above here. So that would have been like a nice 2-to-1, I reckon, at that point. Very similar in here as well. Look what happens. My favorite little pattern, double top, break out of the double top, market moves to the downside. So yeah, I mean, looking at this now, you could still sell, right? I would be waiting for another pullback. So let's say you get kind of like 2 or 3 days of really slow pullback. Yeah, we could see another leg back down, but I just wouldn't target anything past that low, just in case you get like a double bottom rebound and prices come all the way back to 72.50. Interesting to see how the Commitment of Traders report comes out tomorrow, because if we see like a significant sort of leg down into these kind of 150,000, 138,000 contract levels, I would see that as an extreme. And you know, the last time we were kind of in these levels here, you know, oil moved higher, oil moved higher. So is this a kind of a point? Might be trying to break that kind of low here. You know, that's kind of the significant low, around $60. So if we get it like a decent chunk down into the 150s, you know, I wouldn't mind looking at a bit of a reversal on that move. Also, what do you think of Bitcoin? Let's go have a look at Bitcoin. I don't know where Bitcoin is right now. I mean, God, it's just jumpy, isn't it? It's very jumpy. What do I think of Bitcoin? Well, this is the analysis I was doing earlier, actually, because I was going to talk about the potential of this to sort of continue lower. It's been a wild week in general. Bitcoin has kind of held up okay. It's held up a little bit better than I thought it would. Obviously, that was the announcement of the crypto reserve situation out of the US administration. That then sunk lower because we had sort of that global risk off moment. And I think, you know, if you are risk off, you're not really going to put your money into Bitcoin, are you? You're going to be rather in cash, I think. I might be wrong. Most people probably see Bitcoin as a haven, I guess. We've then rallied back up into this level. This is an area where, you know, that's just a simple supply zone, isn't it? The market's stalled here. We've dropped down. We've come back into it. We've seen some selling coming back into the market. If we break 94s, I can see us probably heading higher. But what is it going to take for that? And I think it's going to have to be volatility index has to be below 20 at that point, I think, for risk assets to really thrive. I think we're going to have to see a rebound on the likes of the NASDAQ and the likes of the S&P 500. I mean, yesterday there were some signs. I mean, that is such a sucker candle, isn't it? This daily chart candle here on the S&P 500 is such like a sucker candle. You break the low, you close back above, you close back above. You know, I imagine a lot of retail would have bought here, seeing that kind of pin candle wick off the lows. You know, the problem we've got is that just the sentiment is not good in the US. And if NFP comes out tomorrow and is worse, you know, shows a real decrease in jobs created, which could happen considering the fact that we've seen a lot of changes in sort of government departments in the US. We could see an even bigger fall in the US stock markets. So I think now we're starting to really see that. The problem we've got at the moment is it going to be something that is long lasting, or is it just something that's going to be a rebound? Now, history will tell us, right? Let's go to a monthly chart. That pretty much stock markets go up, right? You know, that's what history is telling us. But there are moments where we get these kind of deep retracements. 2022 was probably one of the biggest ones, before obviously 2008. I don't know why it's not showing us 2008 here. Let me go on to the futures market. Might give me a little bit more. Here we go. So I've got till 1998. So, we had quite a bear market in the crash in 0102. Significant move higher. Bear market in 0708, right? And then we've just we haven't really seen a significant bear market, I don't think. So could it be a seasonal drop on Feb to March? Maybe. Let me get this up over here and I'll have a little look at some seasonals. Let's look at the index as a whole. So let's have a look at the S&P 500. S&P. I mean, that's a pretty strong seasonal drop, isn't it, Eddie? I've got from February 16th till March 23rd. Pretty bearish, isn't it? Over the past 10 years, it has a 70, or just under actually, 67% win rate. Sorry, this is what I'm looking at. Right, if you go from the very high to the very low, you see it says 33.33% winning trades, but because it's short, you got to look at it from the opposite. So let's go wider. That's a bit too wide, I think. Okay, even in the past 25 years, 15th of February down to sort of the 12th of March, there's usually a decline in the stock markets. So I think you might be on something there, Eddie. Not so much over 15 years. If we have a little look at 10 years. The thing is, when we look at recency, it's only really happened 3 times out of the past 10. That's my only concern. One was 2020, 2022, where we had obviously the inflation situation and whatnot. 2023, Trump's administration didn't really suffer that bad. And he implemented tariffs in 2018. But there was still kind of poor performance in 2018, 2019. Let's have a look at more. 2025. Yeah, it's following a similar vein, isn't it? Over 15 years ain't great. 25 years, you get that nice little correlation. Yeah, maybe onto something there, Eddie. I think, that compounded with the recent sort of economic data as well. And, especially when you've got firms coming out saying that their sales aren't going to be as good and everything like that. So, yeah, it makes a lot of sense. So really speaking, end of March is where we should be thinking about potential rebounds. So when's that? March 9th. So maybe next week, March 10th. because we're on the 6th of March right now, aren't we? Let's have a look. Let me go back to 10 years. Yeah, you see, if you take the COVID little bug out of it, COVID did a lot of damage to this. Look at that, 2020, 33.61% drop. So that is that's quite interesting there. So yeah, maybe we're looking at the start of March then for any kind of move higher. I mean, when we look at sort of moves, let me just have a quick look. What is the move that we've had from February so far? We've had a 6.7% drop so far. When we look at the average move, it has been around 4.41%. So we're kind of outside of that average right now. You got a couple of 6% here, 7%. So if it goes beyond, in my theory, right, this is the way I'm looking at this max drop situation here is, that's kind of the move, the biggest move that we've had over the past 10 years, right? So the biggest move was COVID. I think we got to outlier that because that was unprecedented, right? So the most it's dropped in the last 10 years is 7.04%, okay? So what that makes me think is, or what I like to do is I like to look at, so really we've got to look at from this date though, from the 15th of February. So we're looking from the 15th of February, let's just go by day, which is around here, right? So I'm going to measure from this area down. So we're already at 6.4. So I think it was 7.3%, wasn't it? So what I like to do is put a marker there. Okay. And what I'm going to do is seasonal max drop last 10 years. So think of that as like an ATR, right? How likely is price to push past that point, right? When it comes to from a seasonal perspective anyway, how likely are we to pass beyond that point? Because basically that means that's the biggest move we've seen in that period for the last 10 years. So I would be very much interested to see if we came into that. Let me just double check that. That was 7.3%, wasn't it? Oh, it's just 7%, 7.04. So let's go back. Let me measure down from that close. 7.0. So actually, it's more like there. 57.06. 25. So I'm gonna set an alert on that. Because if we get past that, that is quite a significant move in the market. You know, past that little seasonal drop there. Also, if we look left, quite a big level of influence, right? In and around that zone. Got this little gap on the futures market that I haven't seen. Maybe that's what the market's going to try and come and fill, maybe. Who knows? So I'll be very interested to see if that does happen, because I think this would be a good area for these people that are short here to take some profits off the table. Let's have a quick look at something else as well. Let's look at events. reports US. GDP, initial jobless claims. Non-farm payrolls. I don't like that. It's basically what I was trying to do is to try and see if there was any kind of seasonal performance heading into NFP over the last 10 years and after NFP. You know, so basically it tells us over the last, 10 years of data, that's 117 events, usually leading up to NFP is quite bullish, 30 days prior. Even if you go to like 10 days before, you can see that usually from like the 7th day prior, you get this kind of bullish run up. We haven't had that. So that's very hard to use as information because it's obviously not following that plan at the moment. So yeah, very interesting. Just keeping an eye on silver. Looks like silver is starting to pop a little bit higher here. We are starting to see silver prices come back up a little bit. I am bullish silver still, looking for continuations to the upside. Nice little low that's created at 32.77. If we make a new high here, I'm going to bring my stop loss up to 32.25. My stop loss at the moment is not here anymore. It's actually below this low at 31.39 is where my stop loss is. So just around this area here. So if we can make a new high, I'm going to look to move my stop loss beneath that 4-hour swing low there on silver. Let's go look at the others. The others aren't doing too well apart from Aussie Swiss, which has started to kind of push a little bit lower. Very interesting data out of Switzerland this week. Obviously, we talked about the fact that, Swiss National Bank want to be cutting interest rates. They have been cutting interest rates aggressively. I said this event here would be quite big because what we've had from Switzerland is kind of 7 months of negative or to zero or to negative CPI numbers. So that is kind of deflationary, right? Basically means there's no demand in the market. There's a lack of demand. So that's why the central bank was cutting interest rates so aggressively. We've then had this report come out and it's beaten expectations, coming a little bit higher. So, I can see that is maybe a tool for the Swiss National Bank now to temper the kind of, mood of cutting interest rates so aggressively. If we go look at trading economics and we have a little look at Switzerland, I'm looking here. There we go. And we have a little look at interest rates right now. They're at 0.5, right? They're at 0.5. They have talked about going potentially back to negative interest rates, which was from sort of 5 years ago, before that big spike in inflation. They just held at negative interest rates for quite a while. So I do think that they are going to cut again. Especially like oil prices are coming in lower and things like that. But, if we do start to see that this has had an impact on CPI, it's had an impact on GDP, things like that, then, we could see a little bit of strength coming back into the Swiss franc as well. Good afternoon, Instant. I hope you're well. What other markets have you been looking at then, guys? Let's have a little discussion. I said I was going to have a little discussion around this. So on the channel, the other day, I put this question up here, and I said, have you ever blown a trading account? Comment what lesson did you learn? And very kindly, we had some comments here. I see Bongo commented here, Dennis and Bruce. And I think these are some really good points. So let me know in the chat if you've ever experienced that. Some really good points here. And what I like the most out of this, proper risk management. I think risk management is a underrated topic in Forex. And I think because it's so kind of, I feel like, I don't know if you feel the same, but I feel like everyone's just kind of like, you risk 1% and that's it. I think risk should be dynamic to each scenario, to each currency, to each pair. And I think if you are dynamic in risk, then, you know, and also it's got to come down to a number of factors, I think. So who takes more than, I want to know if you guys are swing traders or you're scalpers. So basically what I was going to ask is who takes more than 5 trades a day in chat? Let me know. I'd love to know your opinion on this. See if anybody wants to talk about risk management with me. I like this one from Bongo as well. Learn to stick to the plan and trade my plan. That's one of the hardest things to do is stick to the plan. You know, I think if you are struggling to do that, just get a robot to do it. It depends how discretionary you are, I guess. Yeah, but I like this one. Always follow your trading plan, proper risk management, and lastly, learn from the losses. Yeah, you can learn from losing. You can also learn a lot from winning, especially if you've done things in line with your bias. I think that's really good. Bruce said, "Don't overtrade." That kind of comes into my risk management scenario. Right, guy, I blew my first trading account. I traded without a stop loss, thinking gold was for sure going to go down. Wow, oh yeah, I like that. That's a tough one. That's a tough one. Trading without a stop loss. I think everybody's guilty of that. You know, I don't like trading soybeans because I had a stop loss, but my risk management was so poor on soybeans once that I just, you know, one of what I was really guilty of in my trading was chasing the market, right? So that's why you see I've got these parameters in place now where I talk about waiting for certain setups and things like that, waiting for the change of trend, because I never used to wait for the change in trend. Price would come to a zone, I'd just buy into it. I'd just get into it just to get into it, thinking that I was right. And that's not what trading's about. The market doesn't care if you're right or wrong. But what you should care a lot about is your risk management. So basically, I could lose 3, 4, 5% in a day because I was trying to buy a certain zone, but price just kept going in line with the trend that it was in at the time, and I would just try and buy every rebound. Now, eventually, you'd catch the one that kind of get you some of your money back, but by that time, you've been emotionally battered that you just don't even want to take the winning trade at that point. So that's what I used to be guilty of. I used to chase the market, and it'd lead me to some big losses, some losses that could easily be avoided at that point. And this is why I say I think risks should be dynamic as well, because I would put 1% risk on those trades. So that's why I could be down like 5%. Now trying to build back 5% is can take some time. You know. Barry, welcome. Barry, how you doing, mate? I hope you're okay. Blew a trading account once, didn't put a stop on gold because I was 100% sure it was going down. Yeah, that's it. You know, I think that's when you think you're better than the markets, it comes and bites you, right? It's like last week. So I had a losing week last week, but because I took smaller trade size that week, because honestly, I probably jumped into the move too early. I had one of my old bad habits come in of trying to just buy the move because I thought I was right? But at least now my risk management is in a point that if it does that, it doesn't cripple me. So I was down 0.095% last week, just slightly lower than that. I think it was like 0.48 something. But that's not crippling, right? Because I know that one trade at 2-1 covers that and some. So, you know, that to me was something that's really kind of changed the way I look at that. Tony, I think that the issue is lot size and stop loss. Yeah, absolutely. I have a really weird way of doing things. I don't think, like, when I say mine's dynamic, I like to work out my stop loss from the daily ATR, right? So let me see if I can. I tried to cover this last week, but I was kind of butchering it a little bit. So this is a good example here, actually, on Aussie Swiss. Let me open up. Let me see if I've got my ATR open on here. Yeah. So let me go to a daily chart, because this is the way I like to use ATR. Now, if you look at sort of ATR here, it's been climbing. So this to me says that my stop loss should be 51 pips, right? So if I was to put in a 4 days ATR stop from my entry price, it would be 51 pips up here, right? Now, look what that does to my sort of risk reward ratio. Okay, so that brings that down to 2-1, which is great, right? Fine. But what if I want to try and increase that, right? So I say, what I like to do is I look at the 51 pips there, and basically I say that's where my 1% full risk is. Okay, but then I have to look at myself and say, where am I wrong? You know, I'm wrong above that high regardless. You know, yes, it could probably wick into it and whatever, but if I get a close above that high, I'm very much wrong at that point. So what I tend to do is I look at what time frame I've traded on. So, right, this is another thing I do. If I trade in the daily chart and it's a daily time frame chart that I'm trading, I'm happy to do full risk on a daily chart. I'm happy to do full risk on a 4-hour chart, but I tend to do 0.5%. On an hourly chart, I do 0.25%, because usually my stop loss is a little bit tighter on an hourly chart. So yeah, basically stop loss is always dynamic in terms of, you know, it says 35, 36 pips there. So what I'll do is I'll divide the 51 by 36 to get the amount of pips to use versus the sort of lot size. So I risked about 0.25% on this move in here. Should have been 0.5%, but I'm a bit twitchy on Aussie Swiss right now because we've had that big bullish day yesterday. You have a 3-loss trade a day rule. So do you trade lower time frames, Barry? I guess you do. If you've got 3 trades a day, I probably take 3 trades a week. I don't trade a lot, essentially. So you're actually seeing a little bit of bullishness on the Japanese yen right now. I can see that because my P&L on Aussie yen has just gone negative, which is this little move in here, which I've got to be cautious of this, because if you look, we haven't made a new low on the 4-hour chart. We've made a new low on the hourly, which was this breakout here, I've got in from this counter trend line break. So we'll see if that can start to roll over or not. But again, this is a 0.25% move. And keep an eye on silver. We've just broken into new highs on silver, but barely kind of touched it. I want to see a close above the highs on silver in order for me to bring my stop loss up on that one. If not, I will leave my stop loss where it is right now. I take trades that meet my setup. If it has me at 5 trades a day, then so be it. Then I don't take too much trades in one currency. I won't have more than 2 yen trades or 2 Swiss trades. Okay, nice. I feel like there's a lot of. I'm kind of butchering my words here, but I think a lot people trade a lot. I'm very cautious. I am. 5 minute and 15 DAX at NAS, but practicing my swings and longer term trades as well at the moment. Yeah, I like that. I mean, don't get me wrong. I used to trade Euro futures, and I used to trade on the minute time frame. I just found that for me, with my work, obviously, talking to you guys, doing my analysis for Blueberry and things like that, I just found that trading that was difficult for me to be locked in at the same time every day, and then going and talking about markets at the same time. So I feel more comfortable swing trading than I do, looking at those kind of 5 minute, 1 minute trades. Nice big move there on the 15 minute for Aussie yen. Let's have a little look at the VIX. VIX is starting to come down, you see. Volatility is starting to come in a little bit. Dollar yen popping higher. So I imagine we're starting to see a little bit of a move higher on the stock markets. Yeah, look at the NASDAQ. The DAX is now up 0.7%. FTSE down is quite interesting. This S&P 500 is going to make me eat my words now, in terms of looking at that daily candlestick yesterday. I don't think we've got any data coming up for the rest of the day, do we? No. Natural gas storage. We'll see if that's sustained or not. I imagine Bitcoin would like that a lot. That nice little risk play there. I have to keep an eye on that. I think if we start to see sort of the S&P stock market start breaking into new highs, like, looking at the 4 hour, things like that, we start seeing new 4 hour highs being formed here, then I think that would be like risk on. I think the volatility index will be dropping down to 20 at that point. I think you'll likely see sort of dollar yen come back up a little bit as well, maybe even close back above this low here at 148, which would be interesting to see. I'm going to hold my shorts on Aussie Swiss and Aussie yen. Their currency strength meter trades they've set up, so I'll just keep an eye on them. The only other trade I've got in at the moment is silver, which is now starting to breach these highs here. So if it can get above these highs, close above these highs, I'm going to move my stop loss on this one. See if we can go and kind of get up into the 32s. I'll take a percentage off my trade there. And if we can get up to 33.70s, well, 33.50s, I'd be fairly happy with. But the 34.50s would be great. But we'll see if the market can achieve that or not. Yeah, all Oz pairs moving higher. Yep, so that's just showing us that the risk sentiment is shifting a little bit. Nice little push here on Aussie. Kiwi as well. Nice little move. Just the US dollar's having another push to the downside. here when you look at it from the dollar index perspective, or you can look at it as euro dollar. That's a huge move on euro dollar. I imagine next week we'd see some kind of pullback from that. I mean, it all could come down to NFP really. If NFP is pretty good, then we might see some kind of retracement to this. But if NFP is pretty bad, then we might see a move back up into the 1.1 area on euro, especially with that big stimulus coming in. All right then, guys, we've gone over an hour. I usually like to run these for an hour and a bit, so I'm going to leave it there. Thank you to everybody that joined the live stream. Really appreciate you all. Really appreciate you having the conversation with me as well. So thank you to you. If you can leave the stream a thumbs up, lets me know that you enjoyed the content. And I will catch you next week, Tuesday, 2 p.m. So I will see you there, okay? Have a great weekend, guys. And yeah, happy trading the rest of the week. NFP tomorrow, so be careful with any kind of positions that you're in. Make sure you check on what news is coming out, all right? So thanks, guys. See you later. Have a great rest of your evening.